Good evening, everyone. Hope everybody is fine. And I hope you have gone through what we did in the last session 1 of chapter 6. On the screen, you can see the coverage of our chapter. We covered part 1 and part 2 the other day before yesterday. Let me see if everybody has joined in time. Good evening. Oh, nice. A lot of greetings simultaneously. Okay, chapter 6, Audit in an Automated Environment, session 2. What we covered in the first session, that was part 1, general. As I told you, we have divided the chapter into 3 parts. The general part, the risk control and testing, and the miscellaneous important topics. So the part 1, the general part, automated environment and its key features, relevance of IT in audit, we covered day before yesterday, risks in an automated environment, types of controls in an automated environment, and methods of testing those controls in an automated environment. So we covered the part C, risks and controls in an automated environment. We covered how do we need to understand the risk and document them. Then impact of IT related risks on our audit. The part which was left that day was testing methods, which we'll be taking up today. And we'll be finishing off our chapter with the last part, miscellaneous important topics, internal financial controls, data analytics, and audit findings. Okay, so this is what we did the other day. The general part, meaning of automated environment and its features. Then what was the relevance of IT in audit? Some situations, I told you this is very important, some situations in which IT will be relevant to an audit, some practical situations. Then we came to risks and controls, understanding of risks, and then what we did was considerations by the auditor. Just a second. Yes. Considerations by the auditor for understanding the automated environment. Important point. Then was documentation of what we considered and our risks. What are the risks associated? Again, very important from examination point of view. Then was the impact of IT related risks on our audit. Our impact on controls, then leading to impact on our auditing and further impact on our reporting. So we did what are the types of IT controls, general IT controls, application IT controls, and IT dependent controls. Then the types of general IT controls we did was data center network operations, program change, access security, application system acquisition, development, and maintenance. Right? Okay, fine. So now we come to testing methods. Testing in audit testing methods is how do you test the controls in a business environment. These are the same methods which you might have studied in your chapter 4, risk assessment and internal control. So we are just repeating them. In the same way, in an automated environment as well, how do you test the controls related to IT? Same methods are used. Inquiry, observation, inspection, reperformance. So let us start with inquiry. What is inquiry? The process of gathering information, collecting information directly from an individual. So who could be this individual? This could be the employees, the management in the company, in the organization, who is familiar with the subject matter of or control being tested. For example, you want to test the controls of entry into the organization. So who is the person, who is the individual who will be familiar with the security guard, the person at the reception, right? You want to test the physical security of the assets of the organization. How are the IT assets maintained? So you'll contact the IT team, the CISO, Chief Information Security Officer. So you have to inquire of the individual who is familiar with the subject matter. You cannot ask of the IT related part from a person who is not involved in that department. It may be written, that is, you may ask them to mail you the answer to your questions, or you can take interview of that particular person. So inquiry is you are asking directly from the concerned person about your concerns, the apprehensions, and any queries you might be having. Next is observation. So what is observation? Observation itself means to see, to watch how a person is doing the work. Whether there is flaw, there is some shortcoming, limitation in how they are performing their duties. Right? In childhood, when we used to do newer things, our parents used to stand by. Okay, do this. We are keeping a check upon you. If you do something wrong, we'll let you know. In the same way, an auditor observes how the employers are doing their work. How are they, how the work has been delegating, and are they working as per the authority and access given to them? They just observe. How are they punching the data into the accounting software? Is the software giving an error message? So how are they resolving that particular error message? This is how you observe a person doing work. So what is observation basically? It is the process or procedure of observing processes. How if it is an automatic process, how is it taking place in the particular automated environment? If a manual work, right, starts the automated process, so how does it get started? And after it gets started, what are the errors you get? What could be the potential threats? What could be the potential lapses in the controls? You just observe them. So observing processes taking place or witnessing physical items in place and operating as described. These might also be considered walkthroughs. What is a walkthrough? Like a principal in the school is observing, right? So principal in the school is walking through various buildings, various corridors, and the principal is just observing the discipline maintained in various classes. So we call it a walkthrough. And auditor walkthroughs, what is a walkthrough? Walkthrough is from the starting to the end, you walk through the whole process. You walk through the whole process and check where could have been the lapses, where could the controls, where were the controls which were not sufficient. Okay. Then reperformance. What is reperformance? Performing again, right? The reperformance is independently recreating a process to verify that it is operating effectively. I entered the accounts room and I asked the accountant, how are your accounting software working well? Yes, sir, it's working well. Okay, so let me check. Come on, pass these 2 or 3 journal entries into the accounting software and let me see if the ledger is getting maintained automatically, or there is some manual intervention which has been put into the system whereby manually a person can tamper with the information automatically getting fed into the ledger. He does that, okay, and then I reperform it. I say, okay, let me do it in my way. So I'll reperform it. So when you do a work again which has been done initially, it is called reperformance and it is an auditing test. It may also include recreating a process in tandem with an observation to observe an otherwise automated process. So what do? I observe the person, the accountant, punching in entries into the software. And I observed him. Then I said, okay, now do one thing, reperform it. He reperformed it. I said, Okay, let me see if you can change the rate of depreciation manually, or it is locked in the system. You cannot change it. You require certain permissions in the system to change that. So if the accountant can change, or the person who is the data entry operator, he can change the rate of depreciation manually, I would say, how is it possible? Once fed into the system, what are the permissions required, and why isn't your software giving an error? So I'll ask him to pass an entry which is not feasible, right? I'll ask him, okay, pass an entry of depreciation in negative figure, or just pass an entry with negative cash. Is the system allowing it? If the system is allowing it, that means controls are weak. But if the system gives an error message, I can be assured that checks have been properly placed into that automated system. Right? Inspection. What is inspection? Is the examination of documentation that serves as the evidence. What documents have been made? I purchased the system from the vendor. The invoices, the warranty slips, the annual checkings, the quarterly inspections, the quarterly examination by the vendor. It involves gathering populations and creating samples for testing. For example, if I have to test a particular data, that is our next chapter, chapter 7, audit sampling. What is population? The whole of the data is, the universe is known as population. And we select certain samples and inspect them, examine them. And on the basis of the results of that particular sample, we develop a conclusion for the whole population. Okay? So inspection we can done with observation as well. For example, inspection can also overlap with observation. For example, inspecting fire suppression inspection records while observing that a fire suppression system is in place. Okay, so there was a fire in the building, whether a fire suppression system is in place, and whether it was being inspected properly, examined properly as per the annual checks, quarterly checks. What were the documents maintained? Were there any reports? So they can be coupled along with inquiry, inspection, observation, reperformance. So now you can see as per the image on the right side of your presentation on screen. So in the terms of, we have already covered what is the difference between efficiency and effectiveness. Efficiency is the strength of how the work is being done, and effectiveness is related with the results of that particular work. How good are the results? So in terms of efficiency, inquiry is the highest efficient audit test, the most efficient, while reperformance is the lowest in efficiency. But in terms of effectiveness, like giving results, reperformance gives the highest effective results, while inquiry gives the lowest possible effective results. So they are different in terms of efficiency and effectiveness, and you must understand the difference between efficiency and effectiveness. So this particular slide tells us what do we need to consider as an auditor while applying these auditing testing methods. So the first point, inquiry is the most efficient audit test. We have seen that in the minute. Just remember this image on the side. For examination purposes, you just need to remember this image. Okay? But it also gives the least audit evidence. You are inquiring from a person, okay, and that person might speak a lie. He might deceive. He might not be giving the proper facts, the answers to your question and all. So efficient in the way that you can directly ask the concerned person, but it gives the least audit evidence. So if it gives the least audit evidence and it cannot give us effective results, it should always be used in combination with any of the other methods. So that is why it might be the highest efficient, most efficient, but inquiry alone is not sufficient. Okay. On the other hand, reperformance is the most effective. Yes, it gives the best results and gives the best evidence, right? But again, it is the least efficient because it consumes a lot of time. A person is uh, doing some work, a procedure, and we reperform it. It consumes a lot of time, right? And therefore, and most of the time, it is least efficient. We have done that. So, what should be the conclusion? The conclusion is generally applying inquiry in combination with inspection gives the most effective and efficient audit evidence. So you have to combine the steps of inquiry and inspection to come to a very good audit evidence. But again, in what situation, which test you have to use, it depends, and what combination, it is a matter of professional judgment of the auditor. And it depends on certain factors. What are those factors? Risk assessment. How high are the risks? As an auditor, you have assessed the risk. How high or low are the risks? Again, they'll help you which audit method to use, right? So if the risks are high, you'll always go for reperformance. Alone inquiry is not sufficient. The control environment, whether the controls implemented, the internal controls implemented, internal IT controls implemented in the organization are adequate enough, or they have some lapses, they are weak. Decide what evidence do you require. If you require large evidences, then you'll choose a different method. Obviously, if inquiry gives you the least audit evidence and reperformance gives you the highest audit evidence, you'll in that case, you see, no, the controls seem to be quite adequate and the lapses are quite less. So I'll go with inquiry and inspection. I need not reperform each and every procedure. But in the other case, if you feel controls are weak, I need large evidences, huge number of evidences. So again, your desired level of evidence increases and you will go for reperformance in combination with any other method. Then history of errors and misstatements. You'll go through their past reports, past financial statements. You'll go through their past inspection records and any incidents of security lapses, control lapses in the past. And then on the basis of that, you'll frame your decision. What methods do you need to use? Complexity of business. Again, if the business is highly complex, highly automated, then again you'll might have to change your decision. Assertions being addressed. Again, if your assertions include assertions at the transaction level, for example, at the level of profit and loss, obviously inquiry alone is not sufficient. You'll have to inspect and definitely reperformance of the works being done, right? Whatever tests the auditor is using, he should document the nature of those tests along with what he has observed as per SA 230. These were some of the considerations which we need to keep in mind while using auditing testing methods. Okay, so that was the end of part 1. Let us do some practice questions. I hope you all might have gone through, but I need to cover them. So there were some questions which are quite general in nature. They have been covered over here in the practice question segment, not in your slides we have done. These are very important. Some of the topics I have covered in the form of practice questions, which are quite general in nature. So yes, the complexity of a business environment depends on the level of automation. That is, if a business environment is more automated, it is likely to be less complex. Okay, the first part is correct. The complexity of a business environment depends on the level of automation. They are right in saying this. But the another part, the second part, that is, if a business environment is more automated, it is likely to be less complex. These are the correct and incorrect questions you get in your examination. So what I feel, the answer is incorrect, because I've read, we all have read, the more automation, the more complex the business environment, right? So the answer is incorrect, and you have the reasoning with you on screen and in your notes as well. The second question: in an audit of financial statements, the primary focus is around those risks that are relevant to financial reporting. Uh, what I feel is not only financial reporting, but other areas, other fields as well, right? Okay. Okay. Yeah, I'm receiving answers. Good. So I suppose the answer to second is, in an audit of financial statements, the primary focus is around those risks that are relevant to financial reporting. Yes, incorrect. Because we have, it is not only about financial reporting. There are other non-audit assurance engagements as well. Non-audit assurance engagements. For example, internal audits, IT audits, where financial reporting is not there, but you audit the IT systems, the efficacy of IT systems, the controls. Pre-implementation reviews are when a system is being implemented in an organization. For example, ERP, SAP is being implemented by the organization in their business. Data migration audits, whether the data has been migrated from the old software to the new software properly. Like I told you, the case of income tax, like in the year 2011 to 13, all the banks migrated to the central working environment, core banking solution, CBS software. And if you go to the banks, you go to bank audits today, and they'll say, sir, we don't have proper records before 2011 because 2012, because from 2013 onwards, we are maintaining the records in CBS. We need to delve down in the files and get the records for you, or whatever the previous software was being used. So that could be, there were audits being done at that time, data migration audits, whether the data has been migrated properly from the old software to the new software, from the old system to the new system. Okay. Next. No, Pooja. Primary it could be, but other allied engagements are also covered. It says only primary focus on those that are relevant to financial reporting. There could be other non-audit assurance engagements as well. We are not considered. See, if you talk about IT, so in risks in IT, weak controls in IT might affect your financial reporting. But there are other audit areas as well where we need to consider the effect, the non-financial areas as well, which could affect our financial reporting. The third question: with the introduction of the Companies Act 2013, there is a greater emphasis given to internal financial controls from a regulatory point of view. Correct. This is correct. We did this. Many companies use less complex IT systems, including desktop-based accounting or spreadsheets. In such situations, the relevance of IT to an audit could be less. Yes. The answer to this question, please. Many companies use less complex IT systems, including desktop-based accounting or spreadsheets. In such situations, the relevance of IT to an audit could be less. What do you feel? Is it correct or incorrect? We did this. It might be less, but the auditor, all and all, cannot ignore it. Even then, he's still required to carry out whatever the least understanding the IT environment of the company is required and document the same. The auditor cannot do away with this point. What is the relevance of IT to his audit? Okay. Let's move ahead. Okay, the descriptive questions. So it says, when a business operates in a more automated environment, it is likely that we as auditors will see several business functions and activities happening within the system. Several business functions and activities happening within the systems. Like we talked about reperformance. What do we reperform? We reperform these business functions and activities only. Explain which of the aspects you will consider relevant as an auditor. So, in an automated environment, we see there are many business functions and activities happening within the system. As an auditor, what would be my concern with respect to these business functions and activities? So, as an auditor, what would be my considerations? My considerations when IT is being used is whether the computation and calculations are automatically carried out or some manual intervention is there. For example, interest computation in the case of banks. When I'm on a bank audit, I need to check whether is this system maintained or it can be changed manually by the bank officer. So that would be my concern. Accounting entries are posted automatically. For example, I'm punching my entry in the sub ledger and I'm passing just a general entry, and the ledgers and general ledger postings are automatically being transferred to their respective heads. I need to check this, whether it is being done or not. Business policies and procedures, including internal controls, are applied automatically. For example, if a person, like, for example, if you are filling your articleship form, right? What is the procedure? You log into your SSP portal, you fill in your application form for the articleship, you fill in all the details of the principle under which you are going to get your articleship done, registered. Then what happens is the form goes to the principal's login for checking and approval. So the principal checks it, under whom you have registered yourself. If there is any discrepancy, mistake, or error, he rejects it, he or she. Otherwise, the principal accepts it. The second step is then now the form reverts to you, and you submit the form. This is how the registration of articleship training is completed by you online only. So business policies and procedures, including internal controls, are applied automatically. Once you have applied for your articleship, it automatically moves to your principal. When the principal approves it, it automatically moves back to you. You submit it, and it moves to ICAI office for the final approval. This is how automation is finding a place in business policies and procedures. Reports used in business are produced from systems. So the stakeholders rely upon these reports, and then they take respective action. For example, debtors aging report. What is the debtors aging report? I need answers from you people. What is a debtors aging report? Can anybody tell me? Debtors aging report, which we get from the system. What is it? The debtors aging report. How old are your debtors? In terms of age, we have a debtor who is of 60 years of age. We have a debtor who is 100 years of age. We have a debtor who is 20 years. Is it like this? The debtor's aging report, or is it somewhat different? Can anybody tell me what is the debtor's aging report? Yes. How old our debtors are? Again, layman language. Okay, I understand your feelings. What do you want to convey? How long have our debtors been outstanding? How old our debtors are again? How long our debtors have been outstanding in terms of time? In the while preparing the balance sheet of a company, you might come across the heads debtors, sundry receivables, more than 6 months old, less than 6 months old. So this is how the base for provision for doubtful debts or bad debts is created. When you know from the debtors aging report how long your debtors have been outstanding in terms of time. Okay, so the reports produced from the system should be correct because many stakeholders rely upon those reports. User access and security are controlled by assigning system rules to users. For example, segregation of duties can be enforced effectively. So, how are the users being given access to what systems, and how is such access being controlled? So, these are some considerations which an auditor needs to while studying the business environment. The next descriptive question is, with the increasing adoption of information technology, business today relies on software systems and applications more than ever. Quite true. Many of these IT systems generate and process data that is used in the preparation of financial statements of a company. The auditors also often rely on such data and reports. Explain stating clearly the meaning of automated environment with example. I suppose we all can do it. The answer is with you, right? Okay. Let's move ahead. Okay. Again, correct, incorrect, relating to risks. It says inquiry alone is sufficient to test the operating effectiveness of controls. Answers, please. Inquiry alone is sufficient to test the operating effectiveness of controls. Is it correct or incorrect? We have done it just recently. Inquiry alone is not sufficient. It might be the most efficient, but it is the least effective. So, inquiry along with other audit procedures, for example, observation, inspection, external confirmation, would only enable the auditor to test the operating effectiveness of controls. It alone is not sufficient to test the operating effectiveness. Why are people not replying? Or I have to refresh my web page. Oh, good. There's lag somewhere, you know, like I refresh my web page, only then I get to see what your responses every time. Good. Okay. Almost all of you who have replied are correct. Good, nice. So when auditing in an automated environment, inquiry is often the most efficient and effective audit testing method. Incorrect. We have done it. So the different categories of control over IT systems are interrelated. So what we need to understand, whenever you get to see a correct, incorrect, just recall what it is saying. It is talking about controls over IT systems. So we read about 3 types of controls: general IT controls, application controls, IT dependent controls. It says the different categories of control over IT systems are interrelated. Correct? We know the relationship between the application and general IT control is such that general IT controls are required to support the functioning of application control, and both are further needed to ensure complete and accurate information processing through IT systems. Right? And we have also read application controls and IT dependent controls can only be effective only when general IT controls are effective. General IT controls lay the foundation of strength of controls of application and IT dependent controls. Okay, fine. To rely on the system and application based information, including data, reports, automated controls, configurations, calculations, and IT dependent, it is essential to first determine the existence and effectiveness of general controls. I find it to be correct. Yes, we have done it, that they lay the foundation of strength of other controls. Yes, very easy. IT dependent controls are also known as pervasive controls or indirect controls. ये आंसर मैं आपसे चाहता हूँ. I want this answer from you people. I'll get to know whether you have read the previous notes or not. Fifth, the answer to the fifth part. I want this answer from you people. पता लगना चाहिए आप पढ़े हैं नहीं पढ़े हैं पिछली बार. So IT dependent controls are known as pervasive controls or indirect controls. Is it correct or incorrect? अरे आप लोग अभी फोर्थ पे बैठे हैं, फिफ्थ पे आइए प्लीज. कम टू द फिफ्थ पार्ट. We've already covered fourth. Answer me the sixth part. Oh, good. Nice. Incorrect. Because general IT controls were known as pervasive or indirect controls. We did that in the previous session. Okay, descriptive questions. It says, discuss the common methods applied by the auditor when testing in an automated environment is done by him. So what are the methods, common methods applied by the auditor when testing is done? So it says there are 4 types of audit tests: inquiry, observation, inspection, and reperformance. Okay. So these are the common methods which apply to every kind of audit test. Common methods that apply to every kind of audit test. So what are the common methods? It says for the auditor, obtain an understanding of how an automated transaction is processed by doing a walkthrough of end-to-end transactions. I told you what is a walkthrough. From scratch till the end, the whole transaction you trace. Either you reperform, you observe, whatever be the case, right? And how can you do a walkthrough? Using a combination of inquiry, observation, and inspection. Observe how a user processes transactions under different scenarios. I put on some limitations upon him. And how does the user process that particular transaction? How does the system respond? I'll get an idea of every kind of scenario, reactions in every kind of scenario. Inspect the configuration defined in application, the algorithm to process transactions. Inspect the system logs to determine any changes made since last audit testing. What is the system log? Checking the history, whatever has been done. And what is a log? System log is what has been done in the system as of today, yesterday, tomorrow. Like there is the option of browser history in your web applications. In the same way, you have it in your system to determine if any unrequired changes have been made in the system since the testing was done previously. So I prepare a file. My article trainee prepares a file. He hands it over to me. I check it and I save it. Afterwards, on other day, the next day, when I open that file, I can see there are changes done to it. And I'll check at what time did I save the last file. I'll compare the timings. I saved the file at 6 last evening, and it shows that it has been changed at 6:15 as well. I'll inquire of my trainee, what changes did you do? In the same manner, when a test has been done initially, and there are any changes made to it afterwards, we need to check it. Inspect technical manual or user manual of systems and applications. Okay. So technical manual, the manual you would have got the manual you would have got, right, with the system applications, and the user manual how to use it. Then carry out a test check, negative testing, and observe the error message displayed by the application. Negative testing is what? I perform an operation which should not be done by the system, right? And what error message does it display? What error message does it display? Okay, to carry out a test check. Then conduct reperformance using raw source data or different. For example, there is some formula, you are checking an Excel file or whatever. There are formulas applied and you check it using CATs, computer assisted audit techniques. We are going to do that later on. There are some common methods. Further, list any 4 points that an auditor should consider to obtain an understanding of the company's automated environment. We covered that in the previous lecture. The auditor should understand and consider the risks that may arise from the use of information technology systems. Explain. We did that, risks, in the previous session. Analyze how risks in the IT system, if not mitigated, could have an impact on the audit. So if the risks in the IT system are not mitigated, what impact they could have on the audit? Where risks in IT system are not mitigated, the audit impact could be as follows. First, we may not be able to rely upon the reports obtained from the system because the risks have not been mitigated. Mitigated means reduced to the lowest possible level, where they become inherent. We cannot do anything to control those risks. So we may not be able to rely on the reports, data obtained from systems. Second, we will not be able to rely on automated controls, calculations, and accounting procedures built into the application. Quite obvious. Third, due to the regulatory requirement of auditors to report on internal financial controls of a company, the audit report also may have to be modified because the risks have not been mitigated and there could be some lapses in controls. And again, our audit report has to be modified. Okay. That is it. That was our first part, right? The questions and practice related to our previous session. Now the second part. Okay. Okay. Right? Okay, fine. So, any doubts till now, please? Yes, let's take 1 to 2 minutes. Any doubts till now? So that we may move ahead with our today's topic to conclude the chapter. Okay. Before moving ahead, we need to understand certain terms, right? The first term, application. What are applications? Applications are computer software programs that provide a medium of recording, storage, and retrieval of business operations or transactions in an electronic format. So here you can see in the image below the software programs. You can see Microsoft Word, Gmail, YouTube. All these are application software. Outlook, your drives. What is ERP? Enterprise Resource Planning. It is a type of business application software. So it is a business application software that provides an integrated platform. What is integrated platform? Integrated platform is where, like, you have heard about the conjunction of rivers or where two roads meet. Okay, so it is an integrated platform where integration of two different platforms occurs, where you can simultaneously work upon two different procedures. The integrated platform to automate multiple interrelated business processes and operations. Business processes and operations which are interrelated. Okay, so what could be such interrelated business operations? See, inventory, financials, human resources, production, services, purchases. These are those interrelated business processes and operations. Okay, these three terms are really important. Fine. These three terms are really important. You need to understand them clearly. What is a control deficiency first? What is a control deficiency? These deficiencies are in your systems, computer systems. Control deficiency exists when an internal control is either missing or not operating effectively. So the control is either missing, hai hi nahi, it is not present. I'm entering the company through the main gate and the security staff is missing. He's not there. Or not operating effectively, he's sleeping. To prevent or detect a misstatement. So something wrong should not occur, that is prevention. And if it has occurred, then to detect it. A misstatement, we have already covered misstatement in the chapter 2. What is a misstatement? In a timely manner by the management. So what is a control deficiency? When an internal control is either missing, deficiency is the control deficiency and specific feature attached to control deficiency. A control deficiency, one control deficiency, or a combination of such deficiencies in internal controls that is important enough. It is important enough. Such control deficiency is really important. It cannot be overlooked. Or there is a combination of many deficiencies, control deficiencies, which cannot be overlooked. It is important enough to merit, means attract the intention of those charged with governance. They should know about it. It should not be overlooked. It should be corrected at the right time. Such deficiency. Since there is a reasonable possibility that a misstatement will not be prevented or detected in a timely manner by the management. Okay. Now coming to material weakness. We have done what is control deficiency. We have done what is significant deficiency. And then material weakness. So a control deficiency or a combination of deficiencies in internal controls that is important enough to merit the attention of those charged with governance, since there is a reasonable possibility that a material misstatement will not be prevented or detected in a timely manner by the management. What is the difference between significant deficiency and material weakness? The entry of the word material. Here we are talking about only misstatement. Here we are talking about material misstatement, and we know the difference between misstatement and material misstatement from chapter 2. The control deficiency and significant deficiency relate to only misstatement. But material weakness means the control deficiency is of such strength. The control deficiency is of such importance that if overlooked, it might result in a material misstatement in the financial statement. So you should be completely aware of the difference between control deficiency, significant deficiency, and material. Now, the terms I told you in the last session will be covering. Mainframe, mini-frame are the types of computers. What is a mainframe? A term that is used to describe a very large computer. I told you, if you people have gone through I told you the video on YouTube about on the Google data operations, Google head office. A very large computer with high computing power, memory, and storage required for running large business operations. These are basically used in research and development, space. ISRO, NASA would be having mainframes, healthcare, weather. They are used over there. Right? You can see in the image below the mainframe. What is a mini frame? A small computer that is intermediate between a microcomputer and a mainframe in size, speed, and capacity that can support time sharing, and that is often dedicated to a single application. It is also known as mid-range computer. For example, your IBM, HP, these computers. So what is a mini frame? The computers we normally use, desktops. What is a mini frame? Mini frame is the intermediary between these computers. So attaching the mainframe, connecting the mainframe and the microcomputer is the mini frame. For example, our servers. Then we have data. We know what is data. Data refers to the digital content that is stored in electronic form within the computer. Right? Database is a logical subsystem within a larger information system where electronic data is stored in a predefined form and retrieved for use. Basically, it is a storage tank of data. It is the storage tank of data, the database, where the whole data is maintained and you can anytime retrieve it from there. What is direct data? A backend modification that is made directly to the data that is stored in a database, bypassing business rules into the business application software. This is where you need to put in your controls. Nobody can directly change the data at backend. Very few people have the access, and there is no point in changing data at the backend. That data should be retrieved from the database. It should be worked upon at the interface, at the platform, and then that has to be done only by a few people who have that authority. And it requires a lot of permission. Okay, so I told you before, moving to the miscellaneous topics, we need to understand what are these terms. So let us move to internal financial controls. Very important topics. IFC, internal financial controls from company's point of view. The policies and procedures. Policies are kind of rules, conventions. Put in place by companies for ensuring every company has to put in place some policies and procedures so that we could rely upon their financial reporting, effectiveness and efficiency of operations, the business operations, compliance with applicable laws and regulations, safeguarding of assets. Safeguarding means all your assets are well protected, and prevention and detection of fraud. So this is IFC. This particular topic has been laid down in your Companies Act. The Companies Act says that a company has to put in place some policies and procedures for ensuring, for making sure strongly that their financial statements are reliable, the operations are effective and efficient, they are complying with all the laws and regulations applicable to them, and their assets are properly safeguarded, and frauds are being prevented, and if any fraud has occurred, they are being detected properly, and corrective actions being taken. So this is the definition of internal financial controls. So what are internal financial controls? These policies and procedures. The policies and procedures which a company has to put in place to ensure these 5 points. Those are known as internal financial controls. So the Companies Act lays down responsibility as per these particular sections. So the reference part in this table says who has, in what section has this this particular point finds reference, on which person the responsibility has been laid down under the section, and on what companies this particular section is applicable. So this is just a crux. We are going to do it in detail in the next slide. The first is section 134, subsection 5, clause E. Section 134, subsection 5, clause E. It lays the responsibility on board of directors, and it is applicable to listed companies only. Right? It is applicable to listed companies only. So what does it say? Section 134, subsection 5, clause E. Here we go. So it says, in the case of listed companies, we have done, it is applicable to listed companies, and it is the responsibility of the board of directors. So says, in the case of listed companies, there is a directed responsibility statement. The directors have to lay out a statement, the responsibility statements. They understand what is their responsibility as board of directors towards the company and its stakeholders. So the director's responsibility statement shall state, so this particular point should be a part of their responsibility statement, that the directors have laid down internal financial controls. What were the internal financial controls? The policies and procedures to ensure those 5 points, which I've done in the previous slide, to be followed by the company. And such internal financial controls are adequate and were operating effectively. The responsibility doesn't end by just forming policies and procedures. The directors have to make sure that they're adequate as far as the nature of their company is concerned, and they were operating effectively throughout the year. They have to take it as their responsibility, and their responsibility statement should state this fact, that internal financial controls were there and they were operating effectively. Right? So this was first section. Now, Rule 8, Subrule 5 of Companies Accounts Rules. Rule 8, Subrule 5 of Companies Account Rules. Again, it is responsibility of board of directors, and it is applicable to all the companies. Rule 8, Subrule 5. So what does Rule 8, Subrule 5 says? Let me get back to it. Rule 8, Subrule 5. I'll come to it. Rule 8, sub rule 5. Let me see. It's not there. Let's move ahead. I'll come to rule 8, sub rule 5. Section 149, subsection 8 and schedule 4. It is applicable on independent directors, responsibility of independent directors, and all companies having independent directors. It is applicable on those companies. All those companies having independent directors. So here you have section 149, subsection 8. Point number 4. The company and independent directors shall abide by the provisions specified in Schedule 4, which lays down the code for independent directors. So these are some rules and policies applicable for independent directors, the code for independent directors. So as per this code, the roles and functions of independent directors include that they shall satisfy themselves on the integrity of financial information. What do we mean by integrity of financial information? That it's logged. It is what actually it was. It has not been tampered with. And that financial controls and the systems of risk management are robust. Robust means strong and defensible. They can defend the control attack. Okay, fine. So this was the second part. Third part. Fourth part, section 177. Whose responsibility is this? The responsibility of audit committee. All companies having audit committee applicable on those companies. What does section 177 say? Section 177, subsection 4, clause 7 says, every audit committee shall act in accordance with the terms of reference specified in writing by the board. So these terms of reference are specified by the board, which shall inter alia include evaluation of internal financial controls and risk management systems. What systems have been put into place to manage the risks? Are they operating effectively? And has the audit committee acted properly to evaluate the internal financial controls? So this is applicable on the audit committee and applicable on those companies, responsibility of audit committee, applicable on those companies having audit committee. Now section 143, subsection 3, clause 1, it is applicable on us, the statutory auditors. We could be a part, and it is applicable on all the companies and the most important part, right? Okay. So what does it say? The most important part is section 143, subsection 3, clause 1 of the Companies Act. Our report, the auditor's report, shall state whether the company has adequate internal financial controls system in place, and we have also to comment upon the operating effectiveness of such control. First, we'll comment whether they are in place or not, and then we'll check through our audit procedures or audit test whether they are operating effectively or not, and then we have to report it in our audit report. The section 143, subsection 3, clause 1. This requirement shall not apply to a private company which. So section 143, subsection 3, clause 1 shall not apply to a private company which is a one-person company or a small company. So it is not applicable on OPC or small company. In that case, auditors have been relieved of this responsibility. Which has turnover less than rupees 50 crore as per the latest audited financial statement. So a private company, which is either a one OPC or a small company, or it has a turnover less than 50 crores as per the latest audited financial statement. So any one of first or second point, any one of first or second point and clubbed with this point. Sorry, so not one. It is, this requirement shall not apply to, the first part is standalone. I'm really sorry. The first part is standalone. It doesn't apply to a one-person company or a small company. Or the second part is with a condition: the turnover is less than 50 crore and aggregate borrowing from banks or financial institutions or any body corporate at any point of time, even on a single day as well, it should be less than rupees 25 crore. On 30th of January, my borrowings were 24.90 crores. And on 30th, the second point, if the private company has a turnover less than rupees 50 crores and it is also needs to be made applicable, aggregate borrowings from banks or financial institutions or any body corporate, three persons, banks, financial institutions or any body corporate, at any point during the financial year less than 25 crore. So these 2 points work in conjunction. These are two sub-conditions of condition number 2. So either condition number 1, you fall in condition number 1, or in condition number 2, which further has 2 sub-points and they have to be worked out simultaneously. In that case, the auditor is relieved of the responsibility in auditor's report in these 2 cases. Okay? Please refresh your web page if it is buffering. So this is a very important part from Companies Act point of view. You can go through this once again. Meanwhile, I'm just reading your queries and then let me answer. Okay? Okay, inter alia, Charu, it means whatever is covered or whatever is usually covered, right? Its literal meaning is among other things. Whatever is already covered, that is covered. Apart from that, what is covered, what else you have to cover, right? So general points are there. These 2 specific points should also be there. Evaluation of internal financial controls and risk management. Okay. Right. What are the other questions? Okay, someone says Rule 8 sub Rule 5 is not given in module also. I'll tell you if it is not given in module also. Rule 8 sub Rule 5 is basically related to director's responsibility about the internal financial controls. Rule 8 sub Rule 5, basically what is section? What is an act? An act lays down the conditions and the rules tell us the method how to apply those conditions. Okay, so Rule 8 sub Rule 5 of companies accounts rules, usually it has many sub rules where there is one point related to adequacy of internal financial control. So section 134 subsection 5 clause E is applicable on listed companies, but as per Rule 8 sub Rule 5, adequacy of internal financial controls has been laid on the board of directors as a responsibility in the case of all companies. Okay, even if it is not given in the module, it relates to that only. It has many sub-rules. One of the sub-rule is efficacy of internal financial control. Section 143, subsection 3, okay, part 1. Okay, clause 1, okay. It states, this is the only section which we have read that lays responsibility upon the auditor. It states that the auditor's report shall state whether the company has adequate internal financial control system in place and the operating effectiveness of such controls. So as an auditor, the Companies Act has laid this responsibility on us. All other points are talking about the board of directors. But this particular section talks about the auditor's responsibility. It states, as an auditor, right? As an auditor, I have the duty to report in my audit report about the internal financial control system placed by the company, whether they are adequate. They required more robust controls, but they are taking it leniently. So I have to report it. And whatever controls have been put into place, whether adequate, inadequate, are they operating effectively? There is a fire extinguisher placed. It has been 4 years, the fire extinguisher was not changed. In the case of fire, how would that work? This is a lapse in control. This is a lapse in control. It should have been changed on an annual basis or whatever the composition of that fire extinguisher is. So the fire extinguisher is there, adequate safety measures are there, but are they operating effectively? It has been 3 years, a fire incident occurs and I'm taking that fire incident and just pushing it down the nozzle and it's not setting off the fire. What's the use of it? So they should be operating effectively as well. It says this particular section does not apply on the auditor where of a private company, where this private company is either a one-person company or a small company, or it is a private company where the turnover as per the latest audited financial statements, the sales, the turnover, receipts is less than rupees 50 crores, and along with that, the aggregate borrowings from banks, financial institutions, or any body corporate at any point of time during the financial year are less than rupees 25 crores. Only then this particular company's auditor is exempt under this section from reporting. Charu, if it is a very important section, then these otherwise sections usually don't come in MCQs. If it is a very important section, then it can be. Okay, before moving ahead to data analytics, right? So we will take a break. Let me share with you a video on data analytics. After the video ends, we'll be on a break. And after the break, we'll resume with this topic, data analytics. Okay? For this video purpose, sir. Video के बाद break.
Let's understand data analytics with an example. Come with me. I will take you to 90s.
Do you have wheat bread?
I will just go and check. Sorry, sir. It's finished. Oh shit. I forgot to get extra bread stock for weekend. Please, sir, can you come tomorrow morning?
I will buy from someone else.
I wish I could remember. Now will he come to my store again?
Now let us come back to 21st century.
Hey, I need wheat bread.
Miss, can you check?
Sir, you can take the bread from row 2, rack 4 and slab 1.
Thank you. Can you please bill all this? Also, I have a question in mind. How can you remember so many things?
It is not me, sir. It is the machine that is doing all this. It gives me all the information whenever I ask anything like my current stock, price of items and other things.
That is cool.
Data analytics has helped me out.
So earlier decisions which were made by instincts are now backed by historical data captured. Data analytics had made everyone's life simpler because of automated decision making. In day-to-day life it is helping us in many ways. There are 3 types of data analytics. First, descriptive. For example, creating sales dashboards and tracking performance of products. But they do not tell us why change happened or what will happen in future. So next we have predictive, where utilizing historical data, predict which will help in making more profit. Or which customers should be shown advertisement on social media platform. Or finding out the appropriate launch date for a movie to get maximum customers. Third we have prescriptive, like how much discount to offer on different items. Or which platform to use for engaging customers, and also what content to showcase. So, data analytics is not only the buzzword, but actually has its important in finding insights, and making decisions to ease our life. Like, share, comment and also follow us on YouTube and Facebook to get more videos like this.
So that was about data analytics, a short video. And now we break and we'll meet after 10 minutes, 7:30. Okay. Yes, Chaitanya is right. Rule 8, sub-rule 5, clause 8, you'll find it in your chapter 4, risk assessment and internal control. It is given over there. And again, it is about the adequacy of internal controls in the case of all companies by the auditor. You can find the reference in your chapter 4, page number 4.49, rule 8, sub-rule 5. Okay. We break for 10 minutes and meet at 7:30. Okay, everyone, we are back after break. So Chaitanya says the meaning of non-audit assurance engagement. See, audit engagement is one where the auditor has to form an opinion, give his report, come to a conclusion, right? On the basis of which the management or those charged with governance or the stakeholders may take a decision. Non-audit engagements are those engagements where there are just review works involved. The auditor doesn't declare, he's not auditing something. Okay, he's not going to give a conclusion. There could be consultancy, there could be review of the work, something like this. So this is a basic difference between audit engagement and a non-audit engagement. I hope Chaitanya, it's clear now the difference between audit and non-audit assurance engagement. So after watching a short video on data analytics, let us come to the topic. What is data analytics? So if we break the term data analytics, though the tools, the process of analyzing any data is known as data analytics, and the tools we use are known as data analysis tools. For example, Microsoft Excel. You use the features of find, sort, replace. These are the most common features which a layman uses in Microsoft Excel. Again, it is a whole new world. The Microsoft Excel is a whole new world, right? Some of the features are there which we don't even know about because we don't use them in our daily routine. So to analyze the data, you might have prepared in your assignments and all in school or college, the charts, the pie diagrams and the surveys, the tables, right? So what do? We analyze the data, present it in a different manner. That is known as data analytics. So what is basically data analytics? It is the combination. So we have divided the definition, the meaning into 6 parts. First of all, it is a combination. Combination of what? Combination of processes, tools, and techniques. So it is a combination of processes, tools, and techniques that are used to tap vast amounts of electronic data. We tap is gather, collect, take vast amounts of electronic data to obtain meaningful information. To obtain meaningful information, it is called data analytics. We use charts, we use pie diagrams, we use bar diagrams. These were all the tools we have been using till now. But in the world of data, which is the new oil of the modern world, data. So data analytics refers to combination of some processes, some tools and techniques. We tap that data, work upon it, and obtain meaningful information from that raw data. It is called data analytics. Okay. Moving ahead. Why do companies use data analytics? Why do companies use? The entire stock market works upon this. Why won't the companies use it? Well, not only the companies, the even stakeholders use it. There is no point of going beyond the reasons why do companies use it. It is, if data is the new oil, we need to mine it. We need to work upon it. The companies benefit immensely from the use of data in terms of increased possibility, profitability. Obviously, if you can research upon a particular area, you can sense the taste of the public, the population. You can go with the global demand, with the national demand, the need of the startups. What ideas do you need? Innovations. They will give you profits. Better customer service, obviously. In a hilly area, I set up a company, right? And I take orders, but I am not able to deliver in time. I research upon the data which I have gathered from a local employment agency. How many freelancers are available over here who can work as delivery boys for us, delivery persons for us? I'll tap them, get into an agreement with them, and hire them for my delivery purpose. Better customer service. If I have the data with me, I can carry out my other business activities, whether primarily or ancillary activities accordingly. Gaining competitive edge. Again, I have the industry data with me. How is the industry working? I have a textile manufacturing unit. I'm into that business. And I understand how the textiles are working at the global level, how it is working at the Indian level. What are the new schemes announced by the textiles minister of India for the textile sector? What are the subsidies available? What are the incentives available? How are my competitors doing? The data available at the public platform, on the public forums, I can use that, compare it with my performance, and more efficient operations. But obviously, these three will result to more efficient operations. That is how companies benefit by the use of data analytics. Now, we have talked about businesses, the laymen, the stakeholders. Now we come to auditors. So auditors' work is also the same, mining the data of the client, auditing it. So auditors also require data analytics tools to carry out their audit work effectively, efficiently, and effectively. The tools used by the auditors for data analytics are known as CAT, computer assisting auditing techniques. Are CATs, computer assisted auditing techniques. We make the use of computer softwares, audit softwares, and carry out the audit. And believe me, whenever you get time, articleship training period, you are free from your exams and you have free time, please make sure you go through the Microsoft Excel course available on the digital learning platform of the institute for you as students. Log into your SSP portal. Through that portal, navigate to the digital learning hub of the institute. You will find Excel course over there for you, if it is still there. Or otherwise, make sure that when you do your information technology program, you learn all the tools of Microsoft Excel properly, because it is the basic tool, basic program, which every article, whether he is in Delhi, Mumbai, Chennai, a metro city, a tier 2 city, tier 3 city, even in the remotest village of India, carry out the accounting, auditing work, knowledge of Microsoft Excel plays a big role. In forensics as well. So make sure it is the most common and most important data analytics tool, Microsoft Excel, and it is such a beautiful tool. When you get to know about it, your work becomes a lot easier. So make sure you, if not a pro, at least a good user of MS Excel. So auditors can make use of similar tools and techniques in audit process and obtain good results. but obvious. Human efforts take time, and they are bound to make errors, human efforts. But with the use of machines, our work becomes easy. So when tools and techniques are used by the auditors to apply the principles of data analytics, such tools are known as computer-assisted auditing techniques. So on the right-hand side, it is not there in the module, but I would like to take up some cats with you, take up just for your knowledge, right? So on the right-hand side in the image, you can see auditing through the computer. So let's see what is embedded audit module approach. So this is kind of an audit program which an auditor inserts in the client's system, which keeps a track of the transactions, being done through that system, and gives us points relating to auditing. What were the changes made? When were the changes made? What kind of changes were made? Basically, an auditor has been put into the system in the form of a software. This is known as an embedded audit module approach. Then you can see integrated test facility. This is known as ITF. Okay. So what is this? We establish a fictitious entity. We just do a normal work, a fictitious client created, and process transactions, put in transactions, punch in transactions, and see how the flow works through the client software, the client system. And what are the errors we get? What are the lapses we can see? We don't tamper with the client's data, but we create our own data, our own fictitious data, and work upon it through the client system and see what are the wrongdoings, what are the errors we're getting, what are the lapses in controls. Then, like another example is parallel simulation. Okay. What is it? We develop a computer program like the client's application system using an audit software, and we compare the output of the transactions of that software with the client's software's output. This is called parallel simulation. The same program is written by the auditor's software. Same transactions are entered into the computer client system, and then their outputs are compared. And then we see where the client's particular system or program or software lapses. So these are the kinds of cats you'll get to read about them in your CA finals, as well in your subject of Enterprise Information Systems, EIS. What are the uses of data analytics? Testing of electronic records and data in IT systems using spreadsheets. Microsoft Excel is an example of spreadsheet. And we have specialized audit tools as well, like IDEA, ACL. These are the tools used by forensic auditors. You'll get to read about forensic audit in your CA finals. What is forensic audit? Okay, so data analytics can be used to test the electronic records, research upon that data, work upon that data, carry out audit operations on that data. And IDEA and ACL are two softwares which are used for this purpose. For example, you want to take data from one file and use it in another file. You want to merge two files. You want to sort two files altogether simultaneously. Using Excel might take a lot of time, but these softwares, IDEA and ACL, help us perform these functions in a fraction of seconds. Beautiful software, quite heavy softwares, right? So how do these softwares or data analytics help us? Checking the completeness of data and population, because we work upon samples, selection of audit samples, and recomputations, reperformance of mathematical calculations, analysis of journal entries to check for fraud investigation. That is why these tools, data analytics, finds a lot of importance in forensic auditing, forensic accounting and auditing, and evaluating the impact of control deficiency. We have understood what is a control deficiency. Okay. So on the right side, I've given we have a point relating to ACL. What can we do? How data analytics can be used? See, so we can join two files based on a common key to a new file that contains all or a subset of the fields from the source file. Two files merged into form a third file, which contains data from both the files. So we can compare, correlate, and analyze the data. For example, accounts receivable master file can be joined with the invoice file to check credit limit to sales. Accounts receivable file, master file is a debtors file, and invoice file. So we can join them and to check how much credit sales have been made, or any other particular. So how do we need to use CATs? How do we need to use CATs? The auditor needs to put in a policy or a program to use CATs, right? So there are several steps. So how do we use CATs? There are several steps that should be followed to achieve success with CATs and any of the supporting tools. So what is a suggested approach? This is just a suggested approach. It is not a hardbound approach, just a suggested approach. First step is understand the business environment, including IT, SA 315. Define your objectives and criteria afterwards. Identify source and format of data. What would be your data? What would be the source of the data? The physical files or the electronic data from the server or from this particular desktop or from a cloud? And in what format do you require that data? So identify source and format of data. If your software is comfortable working with Excel files, you require the data in Excel or in PDF format or Word format or a different format as required by the software. Then fourth point, extract the data. That means you have to extract that data from the source, like copy paste. We copy from one place and paste it on another. So we identify the source. We extract the data from that particular file and copy it and paste it on a resultant file. Verify the completeness and accuracy of extracted data. Whether the data extracted is complete in all respects and it is accurate while extracting the data from one file to another or from the database. It doesn't get changed. Its integrity is maintained. Now we apply the criteria chosen over here. We defined our objectives and the criteria on which we'll be using the data, analyzing the data. Now we apply the criteria on this data. Then we validate and confirm the results, what results we have obtained. And then we report and document the results and conclusions as per SA 230. This is on the part of the auditor. For example, you are in school and you have been given an assignment to write an essay. You know, you'll be writing that essay in your own words, but you need ideas. You are doing brainstorming. You go to the web, Google, and you type the topic of the essay, keeping in mind the plagiarism part. So you understand that this is my topic and this should be its conclusions. So what would be your objective? My objective is to secure best possible marks in the assignment. Or my objective is to just pass the assignment. So it is just a formality for me. And criteria. What would be my criteria? I would write these points in the essay. So identify the source. I have these textbooks, these other books, magazines, and of course, Google. And I'll be presenting my assignment. I'll be making my assignment using most of the pictures and figures and diagrams with all facts and figures. I extract the data from the web, from books, from magazines, and I check for its authenticity, whether it is complete as far as my essay topic is concerned and it is accurate. Then I apply the criteria on my data obtained. I make pictures from them, images, write the facts and figures. I validate and confirm the results. Yes, the essay is complete now. It is in my own language and help taken from different textbooks, magazines, and Google. And I submit my essay. These are the same steps which an auditor has to use. This is a suggested approach. How can he make the best use of CAT? Whenever there is some technical topic, this is just a tip for you. Whenever there is some technical topic, or you will find technical topics in auditing and EIS, right? Theory subjects. Always relate those topics to the most common examples around it. This makes you understand those topics clearly and remember those topics till your exam. Even afterwards as well, I still remember how I used to learn topics with stories and examples around me. And even today, when I have to recall what was written in this section and all, I'll remember that story or that particular approach I used. And again, I'm able to recall that particular section or particular provision. But while in exam, you don't have to write in that particular manner. The story in the manner in which you remembered the story or something like that. From examination point of view, you have to write what is technical and professional. That is just a tool to just retain what you have learned. So this is a suggested approach. Charu, merit means draw the attention. Merit means draw attention. Merit the attention of those charged with governance is that it should draw their attention. It is important to be in their knowledge. Fine. Moving ahead. So audit and audit findings. The guidance note on audit of internal financial controls over financial reporting issued by the Institute of Chartered Accountants of India provides a framework. It provides a framework that auditors should follow to fulfill their responsibility. So while you are reporting about the internal financial controls over financial reporting in your audit report, this framework is what you need to follow to fulfill this responsibility. Okay? And the framework on the right is an illustration. And the image on the right is an illustration of this framework. Okay? Can you tell me what are guidance notes? Can anybody tell me what are guidance notes? Please. You are reading audit, you are reading standards on auditing. I have heard about standards on auditing. Pooja, you have to make a way to learn technical language from non-technical language. See, if we are directly learning and just cramming the technical language and answers, they are of short life. Understand the concept, take non-technical examples, and from non-technical examples, move to technical language. It is a process. You have to take baby steps, right? This process is called taking baby steps. So take the most common examples around you, frame them in your technical scenario, and with that, move slowly towards your technical aspect, technical language. It is a process. It is not a one-day work or a two-day work. It takes time. And you have to develop this habit till you reach your CA finals and after that as well. Guidance notes have been laid by the Institute of Chartered Accountants of India to, in certain aspects, in certain areas where the members need guidance from the institute. As a member in practice, we need guidance. What do we need to do in this case? So standards on auditing are the rules they have to follow. Guidance notes give them time, yes, follow this procedure, do this, maintain this documentation and all, with examples. So Institute ICAI has come out with a guidance note on audit of internal financial controls over financial reporting as well. Yes, providing guidance on different matters. So what approach have they given? The framework they have given, they say, first of all, this you might have done in your chapter 4. You have to assess the risk. You have to assess the risk. Then understand and evaluate the business processes and the risk associated. Right? Test for the operating effectiveness of controls and then report. So what is covered in risk assessment? Identify significant accounts and disclosures which are material for the organization, which are material, important, significant. Accounts and disclosures. Both qualitative and quantitative considerations need to be there. Quantitative consideration as in the turnover, the expenses, the change in expenses. Qualitative is how many directors resigned, why was there a huge labor turnover in the organization, such qualitative matters. Were there any fraud related complaints, whistleblowing policy of the organization, relevant financial statement assertions. Identify likely sources of misstatement. What would be the likely sources of misstatement? For example, if we take the case of a hotel, we take the case of a hotel in chapter 2. So what could be the likely sources of misstatement? The bookings, the inventory, toiletry inventories, the rate of taxes in the restaurant, and finally consider the risk arising from use of IT systems. So these are the points covered in risk assessment. Now we have to understand and evaluate what we have assessed. Document understanding of business processes using flowcharts and narratives. So how does this particular business process work? A client is coming to the reception, he's asked to wait, then he's taken to the requisite department where the concerned person meets him and they discuss over the matter. This is how the flow chart, the narrative, how does the business processes work? How is the purchase order placed? A requisition from the factory to the purchase department gets in touch with the store, with the vendors, asks for tenders. Tender is opened, given to the lowest bid person, keeping quality and price in mind. An order is placed, order is received by the storekeeper, at the godown. Then the inventory manager or the storekeeper issues the required material to the factory. So how does the business process work? Prepare risk and control matrix. The risk and control matrix you might have prepared in your EIS and chapter 4 as well. What is a risk control matrix? Risk and controls on two sides of the matrix, and high risk, low risk, and everything. Understand the design of controls by performing walkthroughs of an end-to-end process. So you need to understand the controls, how effective, how adequate they are by performing walkthroughs. I told you what is a walkthrough, from starting to end, going through the whole process. Process-wide considerations for entity-level controls, segregation unity. Controls at the entity level, common for the whole entity at every level. Top level, middle level, lower level. Common at every part of the entity, every operation, every business process. And how has the duties been divided? And understand your IT general controls and application controls. Now you need to assess the nature, timing, and assess of controls testing. How are you going to test the controls? At what time and to what extent are you going to devote your time for testing the controls? You need to check the reliability of source data, whether it is complete, the population which you are going to check is complete in all respects. Only then you can draw an effective sample, efficient sample out of it. Testing of key reports and spreadsheets. Sample testing. Consider competence and independence of the staff performing controls testing. The last part is reporting. You have gone through all the 3 steps. Evaluate the control deficiencies. What are the deficiencies in internal controls? If there are any significant deficiencies, material weaknesses, we have read about these terms. What are the remedies to control such weaknesses? And your auditor's report. Internal controls memo or management letter being issued. This is just an illustrative framework as suggested by the guidance note on audit of international financial controls, the steps you can take. So, what should be auditors' considerations at the conclusion time? After doing all this, at the conclusion of each audit, it is possible that there will be certain findings or exceptions in IT environment and IT controls of the company that need to be assessed and reported to relevant stakeholders, those who need to know about it. The board of directors, the audit committee, the shareholders, whosoever needs to know about it, including management and those charged with governance, other people. The auditor needs to assess each finding or exception to determine its impact on his audit and evaluate if such exception results in a deficiency in internal control. We have understood what is a control deficiency. We have already understood what is a control deficiency. It exists when controls are not sufficient to prevent, detect, or correct misstatements in the financial statements. Right? Evaluation and assessment of audit findings and control deficiencies involve applying professional judgment that include considerations for quantitative and qualitative measures. Each finding, whatever you have found as an auditor, it should be looked into individually or in combination with each other to know about the effects. You need to know if there are any weaknesses in IT controls. What is the impact of such weakness in controls on your audit? You should report such deficiencies to the management. Communicate in writing by significant deficiencies to those charged with governance. So you have reported to the management and now you have to communicate in writing to those charged with governance as well if there are any significant deficiencies. We all have understood the difference between management and those charged with governance while we were reading chapter 2. So this is what an auditor needs to consider. Okay, let me refresh it. Okay, Charu, what is an internal control memo? A memo is basically a document which lists out the procedure of doing something, right? Internal control memo is just a document which is used by the auditor based upon the management's letter that how he'll be doing the or testing the controls, the operating efficiency of the controls. It is laid down, the procedures laid down in the internal control memo. Okay. So there is a flow chart how this assessment can be carried out. The flowcharts are a very easy way to understand any particular concept. So here we go. This is an approach to assess audit findings. How do you assess what have you found during your audit? During your audit, you have found certain deficiencies or certain facts. And how do you assess them? So first of all, the first step, does the finding or the exception result in control deficiency? I say yes. It falls in the category of control deficiency. So I'll report it to the management first. If the finding or the exception falls in the category of control deficiency, I'll report it to the management. Further, what would I do? Evaluate the likelihood and magnitude of deficiency. So how probable is this deficiency going to occur? And magnitude of deficiency in terms of, you can say, significance or monetary matters, in numbers, figures. If such deficiency, if such control deficiency is important, it might result into a misstatement. So if it might result into misstatement, it is a significant deficiency. If it might lead to material misstatement, it is a material weakness further. We are decreasing the scope, control deficiency, then limiting it to significant deficiency and further to material weakness. So if it is a significant deficiency or a material weakness, we have to communicate in writing to those charged with governance, because we have already reported it to the management at the level of control deficiency only. At this level only, if it is falls in the category of control deficiency, we have already reported to the management. But further, if it is a significant deficiency or material weakness, we have to communicate in writing to those charged with governance and further assess its impact on our opinion and the audit report. And finally, give conclusion in our report. But if the likelihood and magnitude is not that much, it is just a simple control deficiency, can we test compensating controls, if any? Okay. Faster. Who can tell me what are compensating controls? Anyone? Can anyone tell me what are compensating controls? Why do I have to refresh it every time? Okay, what are compensating controls? I asked my mother that I have to give treat to my friends for my birthday. I need 2,000 rupees for that. And my mom says 2,000 is such big amount. Lower down a bit. Okay. Alternatively, you arrange the birthday party for me. I'll invite my friends over. When some controls in the organization are impracticable or difficult to implement, we put into place some other controls which might not be as effective as the original controls would have been, but they are feasible and practicable to implement. So compensating controls are those controls which compensate for the controls which ought to be in place actually, which should have been there as a part of the internal controls, but it is practically infeasible or impracticable for the organization to implement such controls. They might require huge cost, huge manpower, which the organization currently cannot bear. So they can settle for some compensating controls which compensate for them as far as security and safety of the organization is concerned. So can we test compensating controls, if any? I say yes, there are compensating controls. So we will require additional audit evidence. We will require Samyak is giving me the definition from Google. Right, Sneha, if one control is not working, then another is there. Yes, compensate for them. Alternative control, right, Charu? Samyak, you have just copied paste from the Google, from Google. Okay, fine. Even then, it is good. It is a mechanism that is put in place to justify the requirement for a security measure that is deemed too difficult or impractical to implement at present time. Yes. So if I can test compensating controls, additional audit evidence may be required. If we cannot test compensating controls again, can we obtain evidence of other mitigating factors that controls are weak, but there are other factors which are reducing the risk? It says, yes, you can. So then again, additional audit evidence is required. If even it's such not the case, so is there an impact on automated controls or IT dependent controls? Yes, they are impacting other controls as well. Additional audit evidence is required. No. So quite simple. If they are not impacting other controls, it is completely fine. Just document the results of assessment and thought process in audit file and conclude. So we are going with this cycle, control deficiency and moving further and documenting it and conclude. Then this cycle where there is significant deficiency or material weakness and conclude. Then there is this cycle, this one, and this one. The last is our assessment does not give result to any finding or exception, which might result in a control deficiencies. It says just document what you have observed and conclude. So 1, 2, 3, 4, 5, and 6 cycles in this flowchart. This is how your assessment works with respect to the deficiency you have found in the controls. How do you assess your findings and how do you report about that? This is the last step you are reporting. Okay, let us conclude the chapter with an example. So there is an example where the point of concern is resetting of passwords. So the auditor has come to know that password resets should be supported with proper request. It is a part of general IT controls. So how would he assess the control deficiency in this particular part, control of password reset? So he first observes, so as per the information security policy of the organization, user access changes. How can a user access the system? If there is change in any algorithm or procedure, it should be initiated first and then approved. The person who wants his password to be reset, he should initiate it and it should be approved by a proper mechanism. But the auditor is on an audit and he is giving it in his report. The point is password reset. He is telling the stakeholders, management about password reset policies, whether operating effectively or not. This control. So the auditor says, however, we observe that there is no formal process being followed for password reset in SAP. Password reset requests are presently communicated over phone, and there is no supporting documentation request letter being maintained for password requests. Please refer your company's information security policy subsection number this. So this is how the auditor is reporting that what did we observe, and this is our conclusion. So it's now the auditor is telling about the risk. As a result of this lapse in the controls, what could be the risk? It says passwords or user ID with critical privileges. The people having critical privileges where they can do anything in the system. They may be reset and misused, like your banking app password, banking, credit card PIN, and all. So this could be a known compliance with the information security policy. The auditor is writing in his report. And now the auditor is giving recommendation. The auditor says the all password requests should be requested through a reset request should be requested through a formal process in writing via mail, not over call, keeping a track, keeping documentation proper. And adequate supporting documentation should be maintained for user changes in SAP, including password reset, and they should be reviewed periodically. How many times was the password reset? Why was it reset such a number of times? Was there a change in roles and responsibilities of the personnel? And the last is management's response towards it, towards auditors, this observation. So this is just an example how an auditor reports a deficiency in control and how does the management give its comments. So this was your chapter of audit in an automated environment, concluding with an example on audit's findings. Let's move to practice of today's part. Okay, the auditor's reporting on internal financial control will be applicable with respect to interim financial statements. Interim financial statements are statements prepared during the year, not the financial statements prepared at the end of the year. Okay, this is incorrect. You may read it. Second part, the directors and management have secondary responsibility of implementing and maintaining an effective internal controls framework, while the primary responsibility lies with the auditor. I don't agree. Whenever you say the primary responsibility lies with the auditor, in this case, I don't agree. The directors and management have their primary responsibility. The auditor just has to check and comment upon. His work is to audit, not make rules. He's a watchdog only. Okay, so this is a question. Explain how internal financial control and internal controls over financial reporting differ. So what are internal financial controls? And what are internal controls over financial reporting? Very important point. This was a 4 marks question asked in one of your exams in the past. So internal financial control, as per section 134, section 5 clause is the policies and procedures, what we have done today. On the other hand, internal controls over financial reporting is required, where auditors are required to express an opinion on the effectiveness of the entity's internal controls over financial reporting, and such opinion is in addition to and distinct from the opinion expressed by the auditors on the financial statement. So for the sake of financial reporting, are the internal controls adequate? The internal controls over financial reporting differ from Okay, this is the question on data analytics, descriptive questions on data analytics. With respect to audit in an automated environment, explain the following. This you will find in your back questions as well. The meaning, we did it in the glossary. Okay, so this was the end of your chapter. Any doubts till now, please let me know. So we'll move ahead with the case study. So I'll upload the notes today as well as some multiple choice questions for you people to practice. Along with that, I'll upload all the notes of this chapter which we have covered in the 2 days in one file, along with the multiple choice questions and the case study we are going to do next in one file. So you have that with you to read, to revise, even at the time of exam as well. So let us proceed. If you have any doubts, let me open the case study file and we'll do one case study and then we are done with this chapter. Till the time I'm looking for that file, I would request you to please put in your queries. Yes, Omar sheet is given for MCQs and CAT is computer assisted audit techniques, where the auditor uses computer or computer softwares, computer programs to carry out his work of audit. That is known as computer assisted audit techniques. Okay, so now we are moving with our case study. I hope you can all see my screen, which I've shared. Please reply me. Are you able to see my screen? Case study written on it? Okay, okay. Okay, fine. So please walk through with me. We took upon this term walk through today. So let's walk together through the case study. Okay? Let us apply the knowledge we have gained from this chapter. So Messrs. KTR and Associates is a chartered accountancy firm with its partners CA Kumar, CA Tina and CA Rohan have been appointed as the auditors of Vigyan Limited for the financial year 21-22. This is a chartered accountancy firm, the partner's name, and they have been appointed as auditors of this particular company for the financial year 21-22. So Hema, Rekha and Jaya. Sushma is not there. Hema, Rekha and Jaya are respectively the managing, part-time and independent directors of Vigyan Limited. So Hema is the managing director, Rekha is the part-time director and Jaya is the independent director of Vigyan Limited. While Mr. Sushil Sharma is the secretary to the CIO. Who was the CIO? Chief Information Officer, Mr. Sushil Sharma is the secretary to the CIO. Vigyan Limited is an e-commerce company, and almost all the processes, operations, accounting, and decisions are carried out by using computers in the company. Here it clicks, automated environment, use of computers. The auditors understand that there are several aspects that they should consider to determine the level of automation and complexity in the business environment of Vigyan Limited. While planning the audit work, the engagement partners discussed with the audit staff, the engagement team, about the various types of controls in the automated environment. So what would they have discussed? They would have discussed about the general IT controls, the application controls, and the IT dependent controls. I can relate it over here. You have to be that fast while attempting a case study. You cannot just read it again and again. You'll waste your time. The senior most article, Ravi, is given the task of understanding, observing, and documenting how the IT department is organized in the company. What are the IT activities? What are the IT dependencies? What are the risks and controls? CA Tina, who is an engagement partner, tells her article Vidya, article's name is Vidya, about using the IDEA software in audit operations. So she might have got that training by CA Tina how to use the IDEA software. So IDEA software is computer assisted audit technique. The different types of audit tests that can be used in the audit of an automated business environment were also discussed within the engagement team. So it is not telling you anything, right? It knows that you have read the chapter 6. It will not talk about anything. It will just tell you about the story. It says the different types of audit tests were also discussed. Now you need to understand, you need to recall what are the audit tests. The responsibility regarding the internal financial controls was also discussed in detail. That chart where we got confused about Rule 8 sub Rule 5, right? The chart, keep in mind, the responsibility was also discussed. Further, the tools and techniques that can be used to deal with enormous data and information of Vigyan Limited were briefed to the audit staff by the engagement partners. Data analytics. Now, another engagement partner, CA Rohan, observes that the IT risks have not been considered for and not mitigated to an acceptable level, thereby impacting the business environment such that more substantive audit work is needed to be done by them as auditors. CA Kumar finds that the secretary to the CIO has been given access to the information system that enforces less or no limits on using that system. Access breach. He has been given excessive privilege powers. The secretary to the CIO has been given access to the information system that enforces less or no limits on using that system. He requests Mr. Sunil Sharma to tell him about the company's documented policy with respect to the business continuity plan and disaster recovery plan to recover from failure in case any unfortunate event occurs. We read about BCP and DCP in general IT controls. He further tells article trainee Raman to prepare a risk and control matrix as per the risks identified relating to the company's automated environment. The team carries out the audit, and while assessing their findings to be included in the audit report, they find a significant deficiency in the internal controls. Significant deficiency. Remember the flowchart we did at the end? They find a significant deficiency in the internal controls and discuss among themselves as to how it should be reported. Suspense. Suspense at every point of the story. Suspense at every point of the case. Now, surprise, surprise, the question. Based on the above facts, answer the following. The powers given to Mr. Sunil Sharma by the CIO. Sunil Sharma is the secretary to the CIO. What were the powers given to him? CA Kumar finds that the secretary to the CIO has been given access to the information system that enforces less or no limits on using that system. So what is the meaning of this power? It is a data breach, segregation of duties, super or privileged access, centralized system control. Come on, be fast with answers. Yes, Neha, right. What about others? The powers given to Mr. Sunil Sharma by the CIO falls under the category of, this is what a suspense in a case integrated case scenario is. This is how you need to answer the question. I've received answer from only one person. Sneha, please come on. Others? Yes, Charu, good. Tanu, good. Yes, Harsh, good. No, Vrinda, you're wrong. The answer is C. Super or privileged access. Okay? The answer is C. Super or privileged access. The answers have been given at the end. I'll upload the answers with your the notes as well. Don't be worried of the answers. Just be with me. Okay. So second question is kind of a statement assertion type of question. Statement 1 says section 149 subsection 8 of the Companies Act applies to the company and the director Jaya specifically. So one of the persons asked me about the asking of sections in the MCQs. So the sections might not be asked directly, but in this manner. You should know what is section 149 subsection 8 about. What is section 143 subsection 3 rule 1 clause 1 about. So section 149 subsection 8, if I remember, was related to independent directors. So let us see if it says it applies to the company and to director Jaya specifically. Who is Jaya? Jaya is an independent director, right? Section 143 3 subclause 1 of the Companies Act applies to Hema, Rekha, and Jaya and Sushil. So who are Hema, Rekha, Jaya and Sushil? They are the directors. But this section was, if you remember, I reiterated it time and again, it applies to the auditor. So for me, there are two statements, statement 1 and statement 2. So I feel statement 1 is correct, but statement 2 is not correct. Section 143 subsection 3 clause 1, guys, this applies for the auditor, not for the board of directors. You have to refer that table which we studied today. So only statement 1 is correct here. Okay, moving ahead. The work allocated to Article Raman is of the nature of dash as per the guidance note on internal financial controls issued by the ICAI. So there was a framework when we talked about guidance note. These were the 4 parts: risk assessment, understand and evaluate, test for operating effectiveness, reporting. So one of the tasks from these 4 heads was given to Raman. So what was that task? Okay. Yeah, over here. Article Raman is told to prepare a risk and control matrix as per the risk identified related to company's automated environment. We studied this. Yes. You prepare a risk and control matrix to understand and evaluate the risks and their results. Third answer is B. Right? Again, C. If you know about the guidance note framework, you know about the 4 heads and what points are covered in, you'll definitely come to know what kind of work Raman is doing. Fourth, the work being performed by the article Trini Divya is an example of using dash in audit. audit test, walkthrough, written representation, data analytics. What is Divya doing? Okay, where was Divya? Uh, oh, I need to find Divya. Here she is. Okay, it was Vidya, not Divya. I'm really sorry. I'll change it. CA Tina tells the article Vidya about.
In progress.
As per me, it notes as well. Raman and his team are working in compliance with. So, what is Raman doing? Where is Raman in the story, in the case? Okay, so we have Raman is preparing a risk and control matrix relating to company's automated environment, business environment, automated environment. So here again, SA 315, understanding the entity and its environment. Obviously, risk control metrics relating to the environment. I hope there are no video issues now. Is it clear? Is it okay now? So it is SA 315. CA Rohan's observations show the impact of risks in IT environment on. What did Rohan observe? What did CA Rohan observes that the IT risks have not been considered for and not mitigated to an acceptable level, thereby impacting the business environment such that more substantial audit work is needed to be done. So, what I feel is CA Rohan's observations show the impact of risk in IT environment on. If you get the word substantive over there, it doesn't mean their answer is substantive audit. The answer could be controls as well, reporting as well. There could be no risk. So in impact, video was 3 parts, right? So here we are. Seventh answer is B. The impact of IT risks on controls. See, what did C. Rohan observe? Showed us the impact of risks in IT environment on controls. Eighth question. CA Kumar's request to Mr. Sunil Sharma has the following implication. What did CA Kumar request CA Sunil Sharma? He requests Mr. Sunil Sharma to tell him about the company's documented policy with respect to the BCP and DRP to recover from failure in case any unfortunate event occurs. Statement 1. This request falls under the program change type of general controls implemented in the company by the management. His objective of the request is to ensure that access to programs and data is authenticated and authorized to meet financial reporting. So we did 4 types of general IT controls: data-centric network operations, program change management, access and security, and acquisition, development, and maintenance. So whether his request falls under the program change type, we'll check for the activities which fall under program change. And objective, every type of general IT control has its objective. I feel statement 2's objective is related to access security part. And yes, BCP and DRP could be program change. So as per me, the answer to 8 could be A or B. What do you feel? Only statement 1 is correct. Only statement 2 is correct. Both statements 1 and 2 are correct. Both statements 1 and 2 are incorrect. Let me know, what do you feel? Which part is correct? CA Kumar's request to Mr. Sunil Sharma has the following implications. It falls under the program change management, program change type of general controls implemented in the company by the management. Statement 2 is his objective of the request is to ensure that access to programs and data is authenticated and authorized to meet financial reporting objectives. I need answers, please. Only 2 questions left after this, and then we'll be done with our chapter. Only statement 1 is correct. Only statement 2 is correct. Both statements 1 and 2 are correct. Both statements 1 and 2 are incorrect. I find both the statements are incorrect. As per me, both the statements are incorrect. Because the disaster recovery plan and BCP falls under data center and network operation, not program change type of general control. And the objective of data center and network operations is ensure that production systems are processed to meet financial reporting objectives. So I find both the statements 1 and 2 are incorrect. So as for me, 8th answer is G. Oh, it's written wrong over here. I'll change it. In your answers before uploading, I'll change it. 8th answer is G. Both statements 1 and 2 are incorrect because this is not program change type of general controls, data center and network operations. And this objective is of access security. This objective is not of program change or data center network operations. It is of access security. Let's move to next question. 8th answer is G. The audit team finds a deficiency in internal control, which means that control is designed, implemented, or operated in such a way that is unable to dash misstatements in the financial statements on a timely basis. Prevent, detect or correct, prevent or correct, prevent or detect incorrect. Quite easy, quite easy. Prevent, and if it could not prevent, it could detect and further correct that particular control. If the control, there is deficiency in internal control, when it is unable to prevent a misstatement, and further if it has not prevented a misstatement, it is able to detect and correct. If it is not able to do so, the control is weak. It may result in misstatement. Last question. Which of the following is a type of control deficiency or a combination of deficiencies in Indao? All of you are right in 9th. Nice, nice. Which of the following is a type of control deficiency or a combination of deficiencies in internal controls that is important enough to merit the attention of those charged with governance, since there is a reasonable probability that a material misstatement will not be prevented or detected in a timely manner by the management. Material misstatement. So there was misstatement which required attention, and there was material misstatement which required attention. Answer to 10. Last question. We'll conclude our session. You have to answer right. 10th. Significant deficiency, material weakness, significant weakness, compensating controls. What is your answer to 10th question? Good, good, good. Charu, Vrinda, Harsh, Surbhi, really good. Material weakness. Only misstatement was significant deficiency. With material misstatement, it is material weakness. So answer to 10th is B. So that was the case study for you people. I'll upload all the notes, some multiple choice questions and case study for you to revise and to learn through all the notes. Any other doubts? We are here for another 1 or 2 minutes. If there are any other doubts, please let me know. Otherwise, we'll wind up the session. Meet you day after tomorrow for your next chapter, audit sampling. We'll wait for 1 or 2 minutes and then we'll wind up our session. So, 1 minute. Okay, clear. So meet you day after tomorrow. Take care. Good night. See you on 20th. Bye bye. Yes, yes, yes. Yes.